Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, good morning, everyone. Good morning, traders, and welcome to a new trading week and a new episode of Chat and Chart. This is your host, Saif Qaddoura, and I hope everyone is doing well. Let me share my screen and let's start discussing the economic calendar. So, 1 second. Okay, there it is. Okay. Good morning. All right. Guys, I'm trying to share my screen. Okay, there it is. All right, so let's get to it and see what we have this week. All right, so we start with today, Monday. We only have one high impact news, which came from Japan. It was the GDP, the quarterly GDP. The previous reading was 0.5%. The forecast was a contraction of 0.4%, minus 0.4%. The actual came in even worse at 0.6%, minus 0.6%. So that's obviously negative for the GDP, for the Japanese economy. Now, there has been some talks about that the Japanese or the Bank of Japan, the Japanese central bank, is going to start increasing or hiking rates. Okay, so after this contraction in the economy, we might not see any hikes in interest rates, mainly because this will even impact the economy more negatively. Okay, so this might have just like forget it. The market, like this number says, forget it. We're not raising rates, because if you raise rates, it will have a negative impact on the economy. That's for Monday. We move to Tuesday. We have the interest rate decision coming from the Reserve Bank of Australia. The previous was 3.6. The forecast is also 3.6. So it is not expected that they're going to cut rates, and most probably they won't. Then we have the job openings coming from the US. The previous was 7.227. The forecast is a drop to 7.2. If this comes in higher than expected, then that's good for the jobs market, and this lowers the odds of a rate cut from the Fed this Wednesday. But if it comes in lower or as expected, this increases the odds of a rate cut. But to be honest, guys, it's almost a done deal that they're going to cut rates now, because the markets are pricing in a 90% probability that they will be cutting rates on Wednesday. And then we have the 10-year note auction. The previous was 4.074%. Let's see how this one ends, but I expect it, since we're cutting rates, I expect to see maybe below 4% on this auction. Okay, so that's for Tuesday. We move now to Wednesday. Okay, so we have the Bank of Canada interest rate decision. That's another central bank this week. The previous was 2.25%. The forecast is 2.25%, so no change. And the markets are not pricing in any rate cuts. So we most probably won't see any rate cuts this Wednesday, coming from Canada, of course, because like that's Bank of Canada. Then we have the crude oil inventories coming from the US. The previous was 0.574. We don't have a forecast number yet. They haven't released it yet. But if it comes in like higher than this, or the actual comes in higher than this, that's bearish for the oil. And if it comes in lower or in the minus, as in a shortage, this means that demand is outpacing supply, which could mean also that it's bullish for the oil. Okay. Then finally, we have the FOMC economic projections. They're going to have the dot plot. They're going to project what's going to happen next year in 2026. And of course, we will have the FOMC statement. I will make sure that myself and the team will have a summary of this once it's out, so that you guys can like understand what it says. And then we have the Fed interest rate decision. The previous was 4%. We're expecting a 25 basis point cut. So the forecast is 3.75%. So we're going to see a 25 basis point cut on Wednesday, most likely. Like it's a 90% chance. So if that happens, that would be negative for the US dollar and positive for everything else, because as you know, everything is priced against the US dollar. And then we have the FOMC press conference. That's where the actual action will happen, because the interest rate decision is almost a done deal. We know that they're going to cut 25 basis points for this meeting, but the press conference gives us some future guidance, meaning that we will be seeing what the Fed has plans for next year, if they're going to cut more, if they're going to hold the rates at 3.75. This is where the volatility will come, the FOMC press conference. All right. So that's for Wednesday. And let me check. Do you have any questions before going on? Okay, let's move to Thursday. On Thursday, we have the Swiss National Bank interest rate decision. We have the interest rate decision coming from Switzerland. The previous was 0%. The forecast is also 0%. So no change, and the actual might also come at no change. They will not raise or cut rates, because Switzerland have already won the battle against inflation, so they don't need to change any interest rates. All right. Then we have the initial jobless claims coming from the US. The previous was 191,000 jobless claims, which was the lowest in months. All right, and the forecast is an increase to 221,000. If this comes in lower, this means that the jobs market is healthy, it's still solid, it's still resilient. If it comes in higher, it means that more people are claiming to be jobless in the US, which could mean negative for the jobs market. All right, so then we have the 30-year bond auction. The previous was 4.694%. The forecast, we don't have a forecast yet, but since we're cutting 25 basis points, I expect to see it below 4.5%. Okay, then what do we have next? On Friday, we have the GDP coming from the UK. So the previous was a contraction of 0.1%, so minus 0.1%. The forecast is an increase of 0.1%, so a growth of 0.1%. If the actual number comes in at as forecasted or as expected or higher, that would be positive for the GBP. If it comes in lower, it would be negative for the GBP and the UK's economy in general. And then we have the German CPI. The previous reading was minus 0.2%. So there was a decrease in inflation and consumer price index in Germany. And the forecast is also another minus 0.2%. So if the actual comes in, for example, at 0%, or it comes in at 0.1% or 2%, that would be positive for the euro. If it comes in as expected or lower, like minus 0.3%, for example, that would be negative for the euro, because it means they can now start cutting rates. The ECB can now start cutting rates to boost the economy, to boost the growth, because inflation is going down. That's pretty much it for the economic calendar. I think now it's time to move to the charts. But before moving to the charts, let me check if you have any questions. How do rate cuts affect the index market? Okay, now let me explain it to you from the very beginning. First of all, when you have high interest rates, it means one thing, like businesses normally raise money in one of two ways. Either they either through equity, which is stocks, they issue stocks, they issue new stocks, or through debt. Debt, they go to the bank and say, we want money to expand and fund our operations. So if the cost of borrowing, if the interest rates are high and the cost of borrowing is high, it means one thing. It means that they will need to cut costs, so that because they will not be borrowing at this high rate, so they will cut costs, they will hire less, and they will expand less, which would mean lower profitability for the company, worse jobs market, and so on. So how does that impact the index, or the Nasdaq, the Dow Jones, the S&P? How does that impact those? Because when companies don't expand, they don't make more money, this would be negative for them. But if they cut rates, what happens there? If they cut rates, the cost of borrowing becomes less, they can hire more, and the difference in interest rate becomes their profit. So they start making more money. If they start making more money, what is an index made of? It's made of different individual stocks, right? Many individual stocks. In Nasdaq's case, Nasdaq 100, it's 100 companies. It's in S&P's case, it's S&P 500, so it's 500 companies. In Dow Jones case, in Dow's case, it's 30 companies. So the index is composed of many different individual stocks. So if those individual companies make more money, it's good for the index. So to answer your question, they impact the market positively. They impact the rate cuts, impact the index market positively. We will see increases in in the US indices. All right. Do we have anything else? Nope. We're good. Let's now move to the. Let's stop sharing this and start sharing the chart. Okay. All right. You're welcome. You're welcome. Okay. So as always, we start with the DXY. DXY actually has been negative for the past 2 weeks. Let me start with the monthly. 1 second. Start with the monthly. Yes, we might be stopping around 98.4, or we might be going all the way to retest the trend line at around 96.5 maybe. But we'll need to wait and see. But as you can see, the monthly low has been taken out. The previous month's low has been taken out, so that's a negative sign. And it makes sense because markets are expecting a rate cut, which is negative for the US dollar. So it aligns with the fundamental analysis that we have just done. Okay. The weekly also is negative. We're closing like bearish candles back to back, and we might be seeing more drops, but let's see it clearly on the daily. Yeah. So what stopped it here? What stopped it is the 200-day moving average. It's still respected the 200-day moving average, and we have this. Since it broke this low, the 99, I had this drawing like this. But since it broke this low, it means that this is the top, not this. So we are still below this trend line or speed line. If we could be going even like further down, or if once we break above, we can see that the DXY is gaining momentum and is reversing to the upside. But for now, I know it's still negative. All right, that's for the XY. And let's take a quick look at the 4 hours. Do we have any divergences, anything? No, we're good. All right, so that's it for the DXY. Now let's move to the Euro USD, which is the exact opposite chart. That's the inverted chart of the DXY. Now, by the way, this trade, I closed it at break even. I got stopped out at break even, which was 1.1660, which is around this area. And when it went down, I placed my stop above this level, okay, which is my entry. And then it got taken out because of the drop in USD. So I'll be waiting for another chance to short the euro, maybe somewhere around here, maybe around 1.1850, 1.1870. We will see. But I still stand by my analysis, which is we might be seeing a drop to below parity on Euro USD. Okay, but that was a fake signal, the one I entered according to. So now I'm out. I'll be waiting for a better entry. If you look at the monthly, similar or opposite to the US dollar, which is the DXY, we are seeing like the monthly high has been taken out. The previous month's high has been taken out, and we're seeing positivity on the monthly chart. If we go to the weekly, we see also 2 green back-to-back candles, which is bullish and is a sign of strength for the Euro USD. Okay, that's like a temporary strength, if you want my opinion. A big drop coming on gold before rate cut. Actually, that's very interesting. Just watch me till the end. I'm going to analyze gold, and yeah, I might agree with that. But let's keep going with the charts. Okay, so that's it for Euro USD. The daily, let me check. Yeah, it made something we call the failure swing. It was making lower lows, lower highs, and then whoop, it stopped making new lows, and it broke the previous high, which invalidates my trade. That's why I went out of my trade. Okay, so that's it for Euro. Let's now move to GBP USD. Very similar movement, but let's go to the monthly. The monthly also broke previous month's highs very early on in the first 5 days of December. We broke last month's highs, so that's also a positive sign for the GBP. And we also have the GDP coming from UK. So if this comes positive, this will even boost the let's say climb or going up of the GBP. Weekly also very similar to. So if you can, guys, can you tell what's happening here? It's very similar on all charts. So which means that the DXY is the main mover of markets nowadays. So we see the exact opposite candles on Euro and GBP from the DXY. The DXY has 2 bearish candles back to back, and GBP and Euro have 2 consecutive bullish candles. So this could tell us that the Euro, or the DXY, sorry, is the main mover of markets as of let's say this week or this month. Okay. We go to the daily. Yeah. Now the daily has a bit of a challenge on GBP USD. And this is a very important level, which is the 1.34. If we break this level and close above, like for example 1.3450, and we have a closure above, we might see more upside on the GBP USD. But as of now, no, it's still like in a downtrend. This wave could be a correction. God knows. We'll have to wait and see. But for now, it's still like on higher time frames, like the weekly and the monthly. It's still positive. It's like it got rejected from an important level, which is the 50-day moving average. That's the 1.31 level. The daily is still going up. We're making higher highs and higher lows, so no reason to think otherwise until we see a solid reversal to the downside. Otherwise, we're still going up. And actually, you know, this is, look, we have a bullish flag here. Yeah, we have a bullish flag. So what will happen is the following. What does technical analysis tell us? It tells us when you have a bullish flag, you can project the flagpole, which is this, the very strong movement, to the upside. So we might be seeing 1.35 on GBP USD once it breaks this formation. Okay? So that's a positive formation. We have the flagpole and we have the flag. And then once we break above and like stabilize above this formation, we'll start seeing an upward movement. Okay? Thank me later on this. Okay, so let's just take a quick look on the USD JPY, and then we move to gold. Okay, so the monthly is very positive. It's still positive. Unlike Euro and GBP, the USD JPY is not like hasn't broken below. Like if you wanted to like act according to like or act in concert with the rest of the pairs, it should have broken this low, which is 152.6, but it hasn't broken yet. So that's a positive sign for this pair. Let's take a look at the weekly. The weekly is in concert with the rest. We might be seeing like a drop towards 154. If it holds and we get a rejection from here, we might be going higher. If not, we'll move to the next one at 150. But guys, I want to remind you of something, and let's align technicals with fundamentals. Today, which is Monday, very early in the morning during the Asian session, we saw a number coming from Japan, which was the GDP, right? So it was a very negative number. That's like even worse than expected. So this might cause the JPY to go up, like meaning not the JPY, the USD JPY go up, meaning the JPY weakening. Because when USD JPY goes up, what does that mean? It means the USD is getting stronger and the JPY is getting weaker. All right. So this number makes sense that USD JPY might continue going up, especially after the GDP number came from Japan this morning. All right, so that's for the weekly. We go to the daily. All right, for the daily, okay, we saw like a break of trend line here. We might be targeting this level, which is 153.5, 153.4, which is like not very far from the number we got on the higher time frame, which was 154. This might be the like the correction number. If not, we'll go to 150 as we saw on higher time frames. But for now, it's still positive. The numbers that came from like Japan this morning, they support the going up of this pair, which is USD JPY. All right. Now, finally, we go to everyone's favorite, gold. Let's move to gold now. We start with the monthly. Okay. So the monthly closed very bullish last month, and it's now like somehow ranging. Let's take a look at the weekly. Also, the weekly was very bullish. Last week it closed slightly lower, but still nothing of major impact. We might still see a drop to this area and then a continuation to the upside. That's just a consolidation, or that's just a what's it called? Um, an accumulation phase. All right. So now we take a look at the daily, which is very interesting to me because we saw a rejection from this area and then we saw a retest. Like it tried to break this high on Friday, it couldn't, and it got rejected pretty bad. Like we saw a rejection from 258 or 59 to almost like that's a 60% rejection. That shouldn't be considered as a correction because that's very bearish. That's very impulsive. Like in one session, it got rejected at $60, which is 600 points. That is not okay. Let me check. We have a question. My observation on gold now is that we might see a bullish trend because usually when gold gets stuck in an area for a long time, mostly starts aggressive bullish trend. But we have FOMC, so can't say. Yeah, let me tell you my theory. I agree with your theory. It's going up, but not just yet. My theory says that we are in an Elliott triangle, which is like A, B, and we still have C. Okay, 1 second. Still have C, and we have D, then we have E. Okay, so we might be going down somewhere around this area, which is 4,100. After we continue going down here, we might go up to like the early 200s. If it does not break, it means that it might be going. If it gets rejected from 240, 230, we might be going down again to 135, 140, and this might take till end of year. Okay, and then we start seeing the huge continuation. Maybe in January, we might see it do something like this, which is crazy. Imagine like entering a trade here. I'm already in a trade here, by the way, but I might like add more to my position here. Imagine entering a trade here, for example, with your stops here and your TP here. That's even better than my original trade. That's a 1 to 10, guys. That's huge. But that's just for that's a swing trade, of course. That's for patient people. Most of the people wouldn't actually wait this long. But for me, it's it's just a second nature. I like swinging. I like waiting on my trades. So for now, I'm still in this trade, but I will definitely, especially if we go in like the new year, which is 2026, and the price is still here, I would just like buy without any second thoughts. I'm just gonna buy here with my stops here. All right. Targeting the 4,560 for as a first target, and then I might leave some running for the 4,700. And of course, by next year, I expect to see $5,000 on gold. Okay, like sooner or later, we're going to have $5,000 on gold, or we're going to see $5,000 on gold. All right. And what's making me think that, let me show you the silver. The silver is breaking all-time highs, guys. Look, it's at an all-time high as we speak. So this huge rally in silver. By the way, for those of you who don't know, silver has doubled in value since the beginning of this year. So we have 100% growth in silver prices, or like 100% surge in silver prices. Which confirms, because silver and gold, although they don't move exactly the same, but they move very similarly. So since silver is making new all-time highs, we expect to see gold making new all-time highs soon as well, because I have a theory that silver is actually one wave ahead of gold. So if silver is making new all-time highs, it means that gold has to make new all-time highs as well. That's it. Time for questions. Gold and silver have been insane this year. Yes, correct, correct, correct. That's massive. Gold to 5,000. Yes, I agree. Will we buy? Okay, my trade will be a buy at 4,281 with a stop loss at 4,168. Let me check. Let me check your trade for you. Okay, if it breaks this, you mean? With stops below. Yeah, actually makes sense. This makes sense, but I would place my stops below 4,100, for example, which might be the next low here. If we're forming a triangle, it shouldn't go any lower than this, which is 4,080. Once you see what's it called? Pardon me. Once you see a bottom forming here, this becomes your new stop loss area. All right, this becomes your new stop loss area. All right, so what else do we have? What else do we have? I think that's it for today. Let me check the questions one more time. Will rate cut affect gold and silver? Of course, definitely, because what are they priced against? They're priced against dollar, right? If dollar becomes weaker, what happens to gold and silver? They go up. Okay, so I think that's it for today, guys. Thank you for tuning in. Thank you for joining this live stream. I hope this was helpful. Be careful on Wednesday. Try to avoid trading around big news events, especially the interest rate decision and the press conference, especially the press conference. It will be very volatile, it will be very insane, and you will have wider spreads. So my advice to you would be, wait till the market cools down after Powell finishes his speech, and then you can start trading again if you want. As always, trade responsibly, take care of yourselves, and trade in. Bye-bye.